Well, let's talk about the company which owns Zara, and that is Inditex. It's listed in Madrid. It's a Spanish company, of course, but Zara is its main brand. It came out of a small town called Deportivo A Coruña, and the chap, Amancio Ortega, is in fact now one of the world's richest people on account of having built this thing.
Yeah.
Market cap 111.97 billion euros. Big company. Price to earnings ratio 35.43, dividend yield of 1.89%. I mean, Zara is the world's largest, I understand. It's got the most stores, and they really perfected that fast fashion thing that you spoke about, which is where stuff comes quick from Asia or wherever they make it. If it doesn't sell, they move it out quick, so people know that they can go back there literally weeks later and find a whole lot of new funky stuff.
So interestingly, it's interesting that you mentioned Asia. One of the things that actually makes Zara or Inditex a lot different, or significantly different from the rest of the competition.
Not Asia.
Not just Asia. So 60% of their manufacturing plants or factories or whatever are actually in close proximity to their distribution channel. So these guys have they've got manufacturing hubs in Africa, in the East, in Europe. They use Morocco as well, which is one of their biggest manufacturing hubs. They've got one in the US. So they've actually perfected that route to market and made it as short as possible by not only sourcing from Asia. So they sacrifice a little bit of margin, but they make it up in revenue.
Because, of course, the Asia thing's all very well, but that's a better location for super cheap stuff, which is quick and nasty, but not necessary. And then you might have long lead times.
Exactly, because it's further away. Okay,
now the listing is a little bit of a concern because the Ortega family has like 60% of the shares. And so there's a bit of a liquidity concern. Let's look at the share chart, though, because it's done super well. I mean, it really has done super well.
Yeah, there's been a nice kick up more recently. These guys are actually they're changing the way that they do inventory, or they run inventory. So even though they are best in market in terms of supply chain, they're probably going to make it, they're probably going to be even better. I can't remember what the little device is called, but basically each item of clothing has a little tag in it, and you can actually see whether or not it has moved in or out of the store. So instead of having shop floor assistants spending hours on doing inventory counts, you actually have an automated system that alerts you when something's running out or running low. And you can see if something's not selling.
It's all in the point of sale, and there's direct feedback to the manufacturing and the buyers and so on. Just tell me about the kind of items that you find in the stores, though.
Okay.
Is it large runs of very similar items, sort of like Mr. Price, I'm thinking, or is it more upscale? What's the price point? What's the type of item one is talking about? So
for a typical, let's take the dress that I really wanted to buy yesterday. That dress was 850 Rand. So it sounds very expensive, but it's very expensive relative to a Mr. Price or an H&M. We'll pay between 250 and 350 for a dress, but it's less expensive than Country Road and all the Woolies big brands, as well as Forever New, where you'd pay up to 1,500 Rand for a dress. So it falls right in between the value retailer and the more expensive retailer.
The quality and the likely duration that garment will last for?
It's very interesting because it differs from garment to garment. So, I mean, I've had Zara stuff that I've worn for season upon season, and then I've had stuff that literally lasts one wash. So you really need to take care when you shop at Zara, but they don't have these massive production lines of the same item. They'll have like 7 of the same dresses.
Right, so that's the point. You're going to get something unique and special and different every time.
Exactly.
Okay, that's all very interesting. Hot or not, the stock has done extremely well. Do you think it's still going to go higher?
So, I mean, it's on a 35 times historic PE, but that unwinds to about 30 times, and we are expecting a little bit of an improvement in terms of top-line growth, and then we think they're going to focus on margin a lot and probably get some margin gains because of the new inventory system. So, it would be very difficult to bet against this company. It's just so good at what it does.
It's got good momentum and likely to go higher.
So it would have to be a hot, even though it's not a happy hot because of that valuation.
Okay, good. Let's go hot on that one. Let's